Hi everyone, Marv Eisen here from Timeless Dollar Academy, and I'm leaving out the word trading. I'll get to that at the end of the video, so stick around. I want to take you through the week of May 12th through May 15th and give you some of my thoughts of when and if to trade and why I would suggest not to trade on certain days. So let's start today. Let's start with the video on May 12th. Now here's my chart of May 12th, and as you all know who have seen my previous videos, I teach a trading course with 6 trade setups: gap, support and resistance, trend, time and price, momentum, and candlestick. Okay, there are only 6 trade setups. It's not hard to learn trading. But nevertheless, the only thing that we need to know as traders is where is the market going. The second thing we need to keep in mind is we want to eliminate risk as much as possible. That's the key to trading, eliminating risk. And so the fear of missing out is what draws many people into trading when they shouldn't, and as a result, they lose money. So again, let's start here with Monday, May 12th. And here you see my chart with my tailored trading zone drawn out, 56.63 support, 57.22 resistance, and you'll notice the stochastics are put in, but where are the prices? Well, the prices were up here. And the reason that prices were up here is because big announcement on tariffs. I mean, who didn't know about this if you're a friend of you-know-who? And so prices traded way up here into an area well above where the forecast prices, based on our mathematical Taylor model, predicted them to be. Leave it alone. Forget about it. Walk away. Do something else for the day. There are better days, and I'll show you that in a moment as we go through the rest of the week. Tuesday, May 13th. Here's the predicted range. Prices started out right at the previous day's close, right over here at 58.63, 58.64. Broke through the morning high at around 10 o'clock, and we could play the predicted range. Now, the predicted range was based on the Taylor trading zone, and so we can clone the trading zone to the low right over here. Here was the low right over here. Low was put in right over here, and here was where the prices were predicted to trade up to based on the range. So play the predicted range. So that day, Tuesday, was a good day to trade. Now here on Wednesday, May 14th, prices started out just about in the middle of the trading zone. The previous close was down here, the gap 59.04. And so if you wanted to catch it, you jump on quickly, play the gap trade, and then forget it. If you play the gap trade on a particular day and you hit the gap, you make money, please take your money, leave the market, and go home for the day. If you make a good trade based on the gap, which is a 70-75% trade, then leave it alone. Trade the gap, go home. Okay, if you missed it, forget about it, because the prices started out in the middle of the trading zone. As you can see, they stayed pretty much at the support area of the trading zone. Didn't really go anywhere. Leave it alone. If you missed the gap, leave it alone. Now here on Thursday, May 15th, great opportunity. Why? Well, prices started out down here at 58.89. The previous close was here at 59.10, all right? So about 20 points above that, and the trading range was well above that. So great opportunity. Where were prices going to go? And also, as we can see, prices were making higher lows. Okay, we can see the low was put in here, then a higher low. The low was tested, didn't actually take it out, and moved up, and around 11 o'clock broke through the previous day's high here at 59.02. So we can transpose the trading range. Let's do that and see where we would have gotten off. Let's clone it, and we'll clone it down to the low. Okay, right over here. And so where do we get off? We get off right over here, all right? Forget about the rest of the day. This is the prediction. This is where prices hit. This is where you get off. You get on somewhere around here, 59.06. Get off right around here where it's predicted, 59.30, 25-point trade, 24-point trade. Nobody's going to be disappointed with that, okay? So that was Thursday, May 14th, okay? Let me get rid of that, and let's go to Friday. Friday, prices started out right at the previous day's close. And where were they going to go? Were they going to go up? Were they going to go down? Leave it alone. There's no indication. When prices start out at the middle of the trading zone and the previous day's close was already hit, leave it alone. We don't know where it's going to go. Of course, you could have stuck around, Prices can't hide their true intention forever. You could have stuck around and played the range. Here's the range. Let's clone it. Okay, clone it to the low. Clone it to the low. Right here. Here was the low. Where did prices trade? Right around here. Right up here at 50. What is it? 59.80. But leave it alone. Why do it? Prices started up. Let me get rid of this. In the middle of the predicted trading zone. They already hit the equilibrium. Are they going to go up? Are they going to go down? Leave it alone. There are better days to trade. Remember, I showed you Thursday. It was a great opportunity. Okay? It was a great opportunity. Prices start out well below the trading zone, well below the previous day's close. Put in successively higher lows. Great opportunity. Could make a lot of money. All you need is 1 day a week. If you have 2, that's a blessing. So that's my video for today. Some days are better to trade. Some days you leave it alone. And remember, the whole idea of trading and making money trading and trading successfully is to avoid risk as much as possible. So when the prices are opening up in the middle of our trading zone and they've already hit the previous day's close, leave it alone. If you have something else to do, do it, close your computer, and wait for a better opportunity. Thanks so much for watching. Marv Eisen. Trade safely, use lots of patience, and I'll see you in my next video. Oh, and I did say that I left out the word trading in Timeless Dollar Academy. That's because I'm going to be introducing roadmaps. I'm going to be introducing roadmaps to Timeless Dollar. And if you go to my site, timelessdollar.com, you'll see the link on the nav bar, roadmaps. Click on that link. I'm not going to go into it too much other than to say that unlike trading, which is for making money day to day, roadmaps are to get you long-term financial security with far less risk. So thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video. Remember, timelessdollar.com. Click on the roadmaps link. Particularly watch the videos. You'll get a sense. I'm going to be making some more videos regarding the roadmaps and giving you some introduction to it. So have a great day, and thanks again for watching.